morning, everyone, and welcome to today's session. As we've changed the times, it seems to have caused us all sorts of problems. So I do apologise, and thank you so much for your patience. We just thought we'd mix up the times a little bit because the London sessions come and the open has happened, and sometimes it makes it a little bit more interesting. I've got David, and just checking, you've got the yep, he's got the recording up and running, and you should all be able to see the risk warning on your screens. As you know, those of you who come regularly know that we have this. We always start with this, and the reason is very, very straightforward. This can be a very risky business. Please do not even think about entering this market, any sort of trading with money that you cannot afford to lose. Right now, I'm going to go straight back to David because we're going to as I said, the London Open has been and gone, and the easiest way we find now, we've gone through what we're sort of covering in these sessions. If this is your first visit, then what I would suggest you do is either hop over to my YouTube channel or the Quantum Trading YouTube channel and just watch the beginning of the previous webinars, because what they do, they kind of build on what we talk about, which is the price cycle, the C states, and obviously volume price analysis. This is a typical price cycle. This is from our education program, our forex education program, and we really don't want to go over the same things again in each webinar, because we like to sort of build onto what has gone before. So you only have to watch about 5-10 minutes of those webinars. You can watch the whole lot if you want to, and we actually like to look at real world examples and also see what is going on in real time on the charts as well. If you've got questions, please put them down in the chat box, and we'll either do them as we go along or wait till the end. Now, I'm just going to move over to David because, as I said, he's got the chart that he wants to cover in the first part of the webinar. I think you have to change it.
Oh, do I?
Yeah. Are you David? You know what? I think you've logged me in. You've logged in twice as me.
Sorry about this slight confusion, because I actually started it in error, so apologies. Hopefully you can all hear me loud and clear. I'm just going to close off, just going to shut my microphone for 1 second. Brilliant. Hopefully you should be seeing my screen. We're on NinjaTrader. For those of you who come along regularly, you'll know we flip-flop between the two platforms. Anna has the MT45 running on her side, and on mine I have the NinjaTrader. Can you hear me okay? Yeah, good. Okay, fine. What I wanted to do was, I've actually got the Swiss yen here because there's been a lot of Swiss franc buying over the early part of the session. And what I've also got here is, down the bottom here somewhere, there we go. This is actually an annotated chart, same time frame. This is 30-minute. This is the Swiss yen and that was exactly the same chart as you're looking at just now in real time, and this was a little bit earlier on, just before we started the webinar. One of the really nice things with NinjaTrader is that it does print the correct time for your time zone wherever you are in the world. So for example, where we are right now, this is 10 o'clock London time, this was 9 o'clock, this was the London Open at 8 o'clock, and this was European Open at 7 o'clock. So it's very easy to identify where sessions start and finish, and also which cycle you're in throughout the 24-hour period. And the reason I've highlighted this particular pair was for several reasons, just to really illustrate some of the aspects of volume price analysis in particular, and also highlight how you then bring in perhaps the indicators to help you in those trading decisions, that trading analysis, and so on and so forth. And this is just a really nice example. It is a slower time frame, but the lessons are universal, and they can be on a 1 minute time frame, they can be on a 1 month time frame, they can be on any market. Yes, we're on spot forex, but this could be stocks, it could be indices, it could be commodities. It really makes little difference to the analysis itself of the chart, and also how the indicators work. And if we start over on the left hand side, and I'll move over to the live markets, and we'll see how this is actually progressing in real time shortly. But if we start over on the left hand side, we had this bearish phase of price action. This was yesterday. Then we start to move into, this is the US Open yesterday, and up into the latter part, the mid part of the US session. And the first thing you'll note is that in terms of volume at any rate, the move higher is certainly through this region being associated with supportive volume. And then as we get to this phase of price action here, this is where Europe is starting to close down. We're sort of lunchtime-ish US time, late morning if you will, just coming into the early lunchtime session. This is where Europe's closing, and also London's closing down. And you start to see this rise in volume here associated with relatively narrow price action. And that's just giving you an indication that at that point there is some weakness coming into this market. It doesn't mean the market's going to reverse and topple over and go into a nice bearish trend. All it's signaling to you at that point is, yes, you're starting to see some weakness. Why? Because this candle, particularly with this amount of volume, is an anomaly, because given that this is the highest volume of the session, or the period of the chart we're looking at, which is more or less a day and a half, something like that, we've got very high volume, but the price action really doesn't reflect the fact that the volume is being driven into the market, and the market is not receptive to higher prices in particular at that point, because associated with that sort of volume, what you would expect to see based on previous volume, if you look at a candle like this, for example, or a candle like this, if that's your benchmark candle, if you will, and your benchmark volume, then certainly on this sort of level of volume, you would have expected to see, this candle, a nice wide spread up candle with very small wicks to top and bottom. It's not what you've seen. What you've got is narrow spread. In other words, the market is not responsive to higher prices. The volume is being driven into the market, and the price action is not following through. The analogy we've used in the past, which is, I think, a relatively easy one to think about, is a car that is driving up an icy incline, an icy hill, and the steeper the hill gets, the more pressure you apply to the gas, the accelerator, and the wheels start to spin, and the forward momentum starts to slow until a point arrives where actually the car is standing still and the wheels are just spinning. And that's the sort of analogy you have to think of in these terms. We then move into the overnight Asia session, which really starts through this whole period here, right the way through up until now we're into 4, 5, 6 o'clock our time, getting into the European Open, which is around here. Now, throughout this period, we've got resistance building in this level, which is another aspect of support and resistance, which is a key part of volume price analysis. This is relatively minor. You may not be able to see it over here, but the fact that it's a very narrow dotted line indicates that it is relatively weak in terms of support and resistance. But these levels down here, this is what we call the accumulation distribution indicator on NinjaTrader, but it works on price action. So it's looking at support and resistance through the prism of price action, how many times a level has been tested either from below or above, and therefore acting as support and resistance. The deeper or the wider the dotted line, then the greater is that area of support and resistance, and the stronger it is likely to be. And the dashed yellow line here, I've highlighted, this is the volume point of control. When the market is oscillating around these regions, you'll see the histogram on the right-hand side, the volume point of control indicator. This is where you get the deepest concentration of volume, because what we're looking at here from a linear perspective, when we're looking at volume and price here, this is a linear relationship, if you like, between the two, between the price action itself and between the associated volume with that particular candle. But when you rotate volume up onto the y-axis here on the right-hand side of the chart, what you're looking at is the concentration of volume at certain price levels. In other words, volume, price, and time, because the longer price remains in a region, then the greater that depth of volume is built. And the deepest level is at the volume point of control. The volume point of control is like the fulcrum, because at that point, market participants are in agreement. There's no strong bullish or bearish sentiment is being developed. So the price oscillates around the volume point of control. It's the pivot. It acts like you can think of it as the fulcrum of a seesaw, if you will. Those are the points at which the market is just oscillating around. It's sitting there. The concentration of volume is building up. There's no firm trend breakaway to either to one side or the other. And the longer it sits there, the greater that concentration of volume continues to build in that region. Once the market starts to move away from the volume point of control, either to the upside or the downside, then that is a signal that the market has taken a bullish stance or a bearish stance and developing the trend away from the volume point of control as it does so. And then higher up on these levels, you'll see here where markets have paused for a short space of time, you get these low concentrations of volume, very low volume up at the top here. And the key thing from a trading perspective is that as these levels are approached, they will give you a heads up as to whether the market is going to struggle at that level or whether it's like to pass straight through. Because if you've got concentration of volume, as you have here, for example, you expect the market to struggle at the very least to move into a congestion phase. But where you've got limited volume in terms of the volume point of control, in other words, very light congestion, you expect the market to move through there relatively quickly because there's little in the way that is going to hinder progress of the market in that particular area of the chart. This was the London Open. This was 8 o'clock here. We had, a relatively quiet open to it. And then the next candle, we get lots of volume, really nice up candle, just giving you a confirming signal, if you will, that this is a strong move. We've got very limited wicks, the top and bottom, very good volume supporting, decent buying volume on that. So we expect the market, for the time being at any rate, to continue higher. The next candle comes along, we see a bit of a dip, but what do we see? We see quite strong volume coming in on that as well. Wick to the bottom of the candle. That is signaling that the buyers are stepping in as the market reverses. It's not ready to go down yet. The market, the big operators, the insiders are coming in to support that market for the time being, buying, pushing the market back up, which is why you see the close pretty much back near the open. The next candle is pretty much the same as the first, a little bit lighter volume on that one, but again, a very strong signal of confirmation that the market is strong and rising. What's also important about it at this level is that although we haven't got a level on the indicator, it's very easy to eyeball that level and just to look at it from a pure price perspective of where the candles are sitting. And of course, you'd be looking way over to the left of the chart as well to see what's going on there. And bear in mind, I'm just looking at this from one time frame. You will be doing this in multiple time frames, depending on what your trading horizon was. If this is your trading time frame, 30-minute, that's your preferred or that's your primary focus, then upstream you'd be looking at something maybe an hour. downstream faster, you'd be looking at maybe 15 minutes, something of that nature. So this is your window of your trading opportunity, and you're looking at what's going on a faster chart and what is ahead of you on a slower time frame chart. And finally, just to really round it off again, is coming down to the trend monitor, which we've developed to try and help ease the emotion that it builds when you are in a long-term position, you're holding a position in the market. Now, when I say long-term, this could be a 1 minute, a long time in a 1 minute chart might be 5, 10, 15 minutes. On a 30-minute chart, it might be hours, it might be days, whatever it may be. But what the trend monitor has been developed to do is to try to help to keep you in through those periods of price action where the market congests. It maybe reverses slightly against you. You've maybe got a decent position in the market, and then the market pauses and starts to reverse because you have mentally banked that profit. You've said to yourself, this is fantastic, I've got a great position here. And then gradually that position starts to reduce, and the emotion starts to build, and you start to fret and worry, and maybe you close out because you're frightened, you're fearful that you're losing something that you have already banked, you thought you had. And that is the most powerful emotion. And that's what the trend monitor has been designed to do. It transitions into these darker colors where the market moves into congestion. So we've gone from bearish over here through to these transitional, then we're into bullish blue here. We get a transition here back to a darker blue, then we're back into bright blue again. We've even gone into darker red here, but it still hasn't transitioned through to a bright red. Now we've transitioned a roll back through into bright blue again. I'm not saying that's easy to sit through that, but at least it gives you the confidence to hold. And of course, again, you'll be looking at this in multiple time frames. If you were looking at this on an hourly chart, for example, you would see far fewer transitions, and the transitions that you would see on 30 would not necessarily be reflected on the 60 because it all takes time for a trend reversal or a trend change to ripple through from the faster to the slower time frames. And of course, you've also got the trend line which comes with the trend monitor, which gives you an indication of where we are in terms of the fulcrum, this black line in the middle. We're starting to build up back into positive territory again. So it's just a nice example of looking at the chart. Now, let's just drop that out of the way. Let's go to real time, see what's going on. This is where we are now. In the last, what have we had? A couple of candles since then. We had a little bit of weakness coming in on this one. We had a shadow to the upside, wick to the upside. Decent volume under that one, but the follow through on the next candle was nice. We've got confirming volume again. Nice price action to the upside. Nothing really to cause us any sense of alarm at the present. We've got a little pivot forming up there. And you can see all the various levels building up and down the chart as well. You can see the trend line is starting to rise away from the midpoint of the fulcrum. We're obviously remaining bright blue. Now, once we start to move across to, let's go to the CSI. This is on 15, so this is a slower time frame. But the Swiss franc, the reason we were looking at the Swiss franc, because we saw this very strong buying, this green line, very strong buying of the Swiss franc throughout the morning session. This was Europe opening up. This was London. This is where we are now. And we're just starting to see that come off a little bit now. It's very, very strongly overbought, the Swiss franc. And in fact, in terms of pairs to consider, we were looking at the, just go back to the chart, we were looking at the Swiss yen there. But actually, from a trading perspective, you might also have considered the dollar Swiss, because the dollar's been selling off, and Anna's got that on her MT5, because the dollar's been selling off pretty strongly this morning across all the time frames, certainly from the faster down to the not quite so fast. And if you were to look at the dollar Swiss and that sort of momentum this morning, that would have been given you an excellent trading opportunity as well. So there's lots of pairs to choose from. And finally, just before I pass over to Anna, what I've also done here is I've isolated out the Swiss franc on the 15-minute time frame, and it just gives you that sense of the universal aspect of market sentiment towards the Swiss franc at present. Now that may change later on, but for the time being, that is what the market is doing. And if you're going to trade a particular pair, you want to be trading with the flow of the river, the torrent of flood that is coming down the river, selling or buying, whatever it is, you want to be trading that. There's nothing wrong with paddling your canoe in the opposite direction occasionally, as long as you're aware of it. But unfortunately, most traders aren't. They just trade in isolation on one pair, thinking that is the universal sentiment of the market, and often it isn't. In this case, you can see pretty clearly it is, because we've got the Swiss franc at the top here ranking, and we've got Swiss franc buying with all these counter currency pairs down the bottom. I'm going to pass back to Anna at that point.
Thank you. I just want to pick up, it's something we touched on last time at this session, I think it was last week, where basically as a trader, one of the decisions you have to make eventually through sort of trial and error, after trial and error, is, are you just going to focus on one or two currencies, currency pairs maybe, or are you going to be totally indiscriminate and you're just going to look for a trading opportunity? Now, some of that that decision in part is going to be dictated how much time you've got, where you are in the world, and how long you're going to be looking to hold. If you're on the faster time frames as well, is it going to be impacted by the spread? You know, and the amount it's going to cost you to trade, and it partly explains why so many traders like to trade the euro dollar, because a lot of brokers use that to offer very, very tight spreads. The problem is, if you the decision you make, if you restrict yourself maybe just to euro dollar, you do have to accept that sometimes it's not going to move very much. The range isn't going to be very wide. There are periods of time when there isn't a trade to take. That can lead on to boredom and trying to force a trade when it isn't there. So there's lots of decisions you have to make, and underlying all the those the decisions is obviously what suits you. Sort of personality wise, if you feel you have to trade all the time, you feel you really, it does make you uncomfortable not to be in, you know, what do they call it, not to have skin in the game, as it were, then you're going to have to find a tactic that will allow you to do so but reduce your risk. And one of the ways you can do that is when you know your head is telling you you shouldn't be looking to trade, but you can't help yourself. Let's be honest. You know, we've heard of the marshmallow test. Well, you know, that applies to trading as well. You look at it and you think, oh, I've really got to do. There is a way around that, and that is you trade tiny amounts. You really use micro lots. You say, look, I've got to have something in there. You know, it's an itch. I've got to scratch it. Then I will go in with a little tiny micro trade, a micro lot, and at least that satisfies that craving, if you like. Just part and parcel of the emotion of trading is how you manage those emotions. Now, having said all that, one of the reasons we developed the currency strength indicator, I just want to highlight, and David has already been talking about the strong buying that we've seen in the dollar Swiss, the Swiss franc this morning, because what it allows you to do, to look at in an instant, I mean, it just gives you a snapshot, and you don't even have to look at the 28 charts, as however many charts the 28 pairs break down into. It tells you what's been buying, what has been bought, what has been sold, and where that buying and selling has reached. Has it reached a point where it is likely to turn over, and against what? And it goes back to what I was saying before. Most of us like to focus on a a limited number of pairs, which is fine. Now, looking at the CSI this morning, the most popular pairs, certainly for London, would be something like cable. Perhaps you would even looking at perhaps the pound yen. But what the CSI is telling you, I mean, it's screaming at you, is when the lines are moving in the same direction, as we see here, we had a selling of the heavy selling of the US dollar, which has really been kicked off last week with the Jackson Hole symposium and the Powell comments, as it were. That's been selling off. But what has it been selling off against? And it's clearly here because there's been heavy buying of the Swiss. So if you like, what these lines are telling you, that the movement in a pair has been stronger in these two currencies, as opposed to maybe with cable. I looked at cable, I always look at cable, and I think it's only moved in a 40 pip range since this morning. You might have been able to snick a few here and there, but if you're looking to go where there is the strongest interest, the most interest in either buying or selling, clearly there's been selling of the US dollar, but against what? And this is what the CSI will tell you. And certainly if you are a pound yen trader on this time frame, on the 15th, they're going in the same direction. Yes, the yen is going down, but so is the pound. But what is going up against the yen? And I can see that the Canadian dollar is probably one that I would go and investigate further. Now, and the New Zealand dollar, because the white line is the New Zealand as well. So the New Zealand's being bought, as you can see, it's being bought against both the yen and the dollar. But let's look at when this happens. When you read the press, you say the dollar has had a bit of a torrid time again. I have the dollar index here. This is actually the 8-hour chart, because what you also have to be aware of now is the London has been and gone. Now everybody's pivoting towards what is going to happen in the New York session. You've got Donald, you've got maybe there's significant fundamental news as well. This is the index. This is the version of the Dixie, and you can see here the move away from the dollar. The key level for the dollar was the break below 95. We talked in previous sessions. We've talked about psychological levels, important levels in all markets and all instruments, and 95 is one of those for the index. It also coincides with our volume point of control indicator. So if you like, the indicator is also telling us that 95 is going to be pretty significant. Now, this is the 8-hour chart. This is the session. This is the session that we're in at the moment, that kicked over at 6 o'clock London time. So it's obviously heavy selling of the US dollar. And in the Asian session, there was obviously a little bit of buying, a little bit of bounce back, as we can see here. So we know it's bearish on this time frame, but the CSI is saying, well, actually, on the faster time frames, maybe we are going to see a reversal of sentiment. How long that is likely to take? Is it going to provide a potential trading opportunity? Who knows? We have to go and look at the charts. But the CSI is telling us, it's telling us, if the pair that you normally trade isn't highlighted on the CSI, the decision is yours. You can say, okay, nothing is highlighting, I'm going to set it aside, but I really do want to feel I need to be in. Then see what the indicators is telling you. And because they are so at the extremes, you've got the 15-minute. I'll just move up to the 30. You can see the 30-minute as well, although the dollar looks like it's still falling slightly. And I'll go right up to the hour and see what's happened. We always like to look in at least more than one time frame. And although it's still climbing on the hour, that's maybe the only trade that is going to be a little pullback. Maybe it's going to be a pullback before it carries on lower. But because of the time, you've got to look at it in context of where you are in the trading session. Possibly we may be seeing a change in sentiment. But let's go back down to the 15, because obviously this move is already underway, and this is where I know we keep talking about non-time based charts, and we will do a longer session on this. This is the Renko. This is actually set at, I think, 2 pips I've set it for. And this is the move lower in the dollar Swiss. But what's important now, we've missed all this. This is all gone. The trend monitor is still red, but you can see the attempt to base in the 97.60 region there. So that's what the Renko is telling us. On the minute chart, on the time-based chart, which you always use with it, you can see what's after the long move, after the sharp move lower. Go back to here, we've got congestion, a fall, then we had a volatility candle, as often happens with volatility candles, with a lot of volume on price, based on price action. Price reverses back into the range of the candle, and then we have this really nice two-bar reversals. Two-bar reversals are fantastic. They seem to work particularly well. I don't know why on forex we have two-bar reversal and then down it goes again. The trend monitor, by the way, which went over red when it was still in congestion here at 98, has actually remained red all the way through. The trend dots, which are much closer to the price action, they will change so that it was red. We did have a grey, which is an indication that probably we've got some congestion. Then we actually did have some blue ones, 1, 2, 3 before, but because we have, when you have an indicator, you must always look at them in conjunction with what the price action is telling you. So yes, you can see there was a pullback. We knew there'd be a pullback because of the volatility candle, but because we have a two-bar reversal, what is likely to happen on a two-bar reversal? That's the 3-minute chart. If we look at a 6-minute, we double that up. What do we have? We've got a shooting star. That's what it is at the top. A two-bar reversal at the top of a little trend is a shooting star. You just double up the time frames, which is why I like the MT5, because you're on the 3-minute and you see two candles, you move up to the 6-minute and you can see exactly what that is. Let's go back to the 3-minute. Not so flexible with MT4, but still, where am I? I don't want 3 hours. Down the bottom. There we are, M3. Right, so there's my two-bar reversal, as we saw, aka shooting star on a 6-minute. And it's been relentless all the way down. And what's interesting also is the fact is the volume down here, this little sort of median line, it's good to see we are moving out of these illiquid markets that we've had in the summer. We're still in the summer officially. It's another few days. I think whenever, I don't know when Labor Day is, but that's when everything sort of gets back to normal, as it were. Because the CSI was also showing that these two currencies were reaching a point of overbought and oversold, this is what is revealed on the chart itself, and we can see that. We can see this basing. This is the basing that is going on at the moment at 97.64, and it's also at the VPOC as well, the volume point of control. This is really key. The level now that is absolutely crucial to this is 97.68, because this is where price is rotating around and it's going to pull away either in one direction or another. Now it may pull away going up, but the dollar will keep on falling. And if you're coming to this now, it all depends on what tactic you want to deploy, if you like. You see this price action. I've got the hour chart up here as well for it, and we can see this basing. We saw the rise in volume with the down bars. Slightly less on that one, although it's a much wider spread. Then you had quite a lot of high volume, but look at the spread of the candle, how compressed it is. That amount of volume was pretty close to that volume and gave you that range. That amount of volume has given you a compressed candle. And it's when you see price action like this, that if you don't have a strength indicator, because the strength indicator is telling us that it has reached a point where possibly there is going to be an opportunity to go to take a position to the upside on the faster time frames. You just have to, it's like a signal. It's like saying, hey, pay attention. Now, if you're in this trade, if you had already decided that you're in this from the S2, which is 98 down to 98, 97, that's a really nice move on the hourly chart. You could be thinking, right, okay, has it actually am I going to see a short-term bounce? Now that short-term bounce may be enough for somebody to take a trade on the 3-minute chart, or actually, am I seeing a full-blown reversal? And we will know that when we come into the US session, or the US session may simply say, right, no, it's just, you know, that's all it is a short-term bounce, and we are going to carry on low. But if you're in that at the moment, that is your expectation. Your expectation is, given what is happening on the faster time frames, and given what the indicators are telling you, possibly, this is going to congest a little bit before deciding whether to go one way or the other. Is there anything you want to say to that, darling? We're actually going to wrap that up now, because we're going to make these about 45 minutes round. I know we're slightly shorter time and had a bit of a delayed start, but we are going to make them about 45 minutes. It's easier for people to watch on the replay. But we'll keep an eye on certainly the dollar for this afternoon. Well, there is a session this afternoon, and we will be covering certainly the yen and certainly the dollar. And then we're going to be looking at specifically the indices and some stocks as well. But in case this is the first time you've come along to us and you don't know, when I say about the indicators, they are our own. We developed them. They are from quantumtrading.com. You can find details of all the ones that we've developed. And you can buy one, you can buy a bundle of them, or you can buy the complete package. And a lot of our users actually just start with one or maybe one or two, and then find, you know, they really like them and they decide to upgrade, as it were. And if you do, obviously we will credit whatever you spend with us, it will be credited against future purchases. They're a lifetime license, all free upgrades, and there is a 7-day money back guarantee. That includes 24/7 support. That is 365 days of the year, and you can transfer them, port them from platform to platform. There's no charge for the actual porting. The only difference will be that for some platforms, we have developed slightly more indicators than for the MT4, MT5, so there is a differential in prices. You can see it's 894 for the MT45 and 1197 for NinjaTrader, and we are working on other platforms as well. Oh? Of course, and the most important part of the package price is that whenever we develop new indicators, they are automatically added to your package. So, you know, if you were with us right from the beginning, you started off with 6 or 7 or 8 or whatever it is, I think you've got the grand total of 17 there. 15, 17? So a lot of indicators. We will actually do a session on, they actually break down into different phases of price action, and we are going to cover those as well. Some of them are for trending, some of them are specifically for congestion periods, and we've developed them to support different trading tactics and volume price analysis. So we'll do a session on those. The education, we do have a forex program. It's 1391 for MT4 and MT5 and 1694 for NT7 or NT8, and that does include the full suite of indicators. The actual program is all self-directed. There's about 50 hours of videos, video and video podcasts, and 13 PDF downloads. And we also have a little group called Trader Chatter, which traders come along and participate if they wish. They can ask questions and just get support from fellow traders. I think the dogs were telling us to hurry up and be gone, so I do apologize. Right, those are the websites, quantumtradingeducation.com. If you have any questions, you're more than welcome to drop me a line at anna@annacooling.com, or you can email helpdesk@quantumtrading.com. We are back later on this afternoon, and it's all kicking off, certainly politically in the States, and it'll be a lot of fun to have a look at some of the stocks and see what is likely to be happening in the next few weeks, as it were. So thank you so much for coming along. It's been great to have you here. Have a great trading day if you're not back with us this afternoon, and we'll see you next time. Take care.